Welcome to today's event where we have the pleasure to present Inderes. To help us through today's presentations, we are joined by CEO Mikael Rautanen. What we will cover today is the Q2 report you just released yesterday. I think the headline was still a difficult business environment, but good progress in your recurring revenue. But the project business is still hard hit, but you will dig much deeper into it. Also, for full disclosure, we should say we have a partnership on the technology side with Inderes here in HDA, and you own 20% of us. As always, question can be asked in the box down below, and I will see if it fits in, or else we will take it in the end of the presentation. But Michael, I think I will hand the call over to you now to present the results.
Thank you, Michael, and welcome everyone on my behalf as well. Q3 business review. I'd say we're making progress in a tough market. We're seeing growth in our recurring revenue, both organically and supported by the acquisition. We are seeing growth quarter on quarter in our active community members. We're seeing growth in how our new products are being taken in the market. And we're seeing growth in our EBITDA, so our profit. So overall, we're making progress, despite that it's a tough market. And the tough market is obviously hitting our project revenue, where we saw decline on an organic growth basis. So that's where we are seeing a lot of cautiousness in our clients because of the economic situation. So projects are being pushed forward, and clients are not that active in making their decisions. But the underlying recurring revenue business is growing really, really nicely. When we had the very strong market conditions 2 years ago, we saw very strong growth in the project revenue, supported by the market, supported by some COVID tailwinds that we had. And now in this market, we are seeing quite a challenge in the project revenue with the economic situation and some COVID-related pullback in the events business. But I mean, that's the nature of the project business. There's more volatility, while the underlying recurring revenue base, ARR, continues to grow, which is the most important strategic value driver for us long term. And in the long run, we will build very strong basis from the recurring revenue base. With 69%, we're going that way, but we're not yet there where we want to be with the recurring base. The project revenue, we're expecting it to be challenging for the rest of the year, but to remain temporary. And why temporary is because, well, now it's winter time, and after winter comes spring. And how does that? I mean, well, difficult market doesn't last forever. But with spring, it's also good that in our business, we have very strong momentum in our AGM product, and the sales pipeline for next spring is looking pretty good. So we have many reasons to be optimistic about next spring.
And I know it's a difficult question, Michael, but there was probably some COVID related business that will never return. Is that out of your books, and is that your feeling? While it's now is the economic climate that is holding this away, and not that you're still losing some business that will never return of the COVID-19. Is that why you say you express this expectation that is temporary?
Let me return to that question when we go through events.
Let's do that.
But with project revenue, it's not related only in the events business. It comes across all our product areas. Okay. So it affects research, it affects IR software. I mean, the consulting side of it, and also events. And for example, there's zero IPO related revenue here, and that used to be back in the IPO boom. It used to be quite good revenue. So
perfect. Let's take you through the areas.
Yeah. Then of course we need to navigate our profitability in this business environment. So we're having very good cost control and cost management, especially in our mature businesses in Finland. But we are not kind of like pulling the handbrake because of the market situation. We're still putting a lot of effort and investments in our expansion to especially in Sweden and in Nordics. So it's about balancing growth investments and all the time keeping good care of the profitability through disciplined cost management. And also the bets that we make on growth, I mean, we take them gradually. Once we get successes and we see that we're on the right track, we do have the courage to increase those investments if we see that they make sense from a shareholder perspective. For example, in the HCM product, we have strengthened our team quite significantly in the past few months because we are seeing a lot of momentum in that business area, and it makes sense to do those investments.
Perfect.
If we look at the Inderes Flywheel, so the basic idea is to connect listed companies and investors together and make information flow as smoothly as possible between the two. So we need to build the client base from listed companies, and we need to build the investor community, and stronger community makes us more attractive for companies, and more companies enables us to do better services for the community. Here, the number of listed company customers growing really nicely, mainly boosted by the acquisition we did a year ago. And then with the active community members, that's down year on year, but we're seeing quite the good momentum in many of our metrics regarding user activity, and the number also grew quarter on quarter there. So very positive to see that the appetite to start. I mean, it's a great time to start investing in stocks right now, I would say. So very happy to see that there's momentum picking up there as well. Number of personnel, that's roughly at the same level as it was when going into this year. So reflecting the fact that last year we had a lot of recruiting and a lot of investments. We geared up for growth. We did one acquisition, and this year it's been more stable, also because of the market conditions and our cost control. Next, digging into our product areas. So with equity research, we grew our contract portfolio on net terms by one contract during the quarter, and year-on-year growth 8%. So we're seeing a slowdown of growth there. We're happy with the customer retention. I mean, the stickiness of this service is extremely strong, and we are proving the case with I mean, the customer sticking in this market as well very well. That's a very good sign. When it comes to winning and landing new deals, we do have good momentum. We have high level of sales activities going on, especially in Sweden. But kind of like the lead times are long, and it takes time for customers to make the decisions. So we're seeing some sluggishness there, but that's I would say part of the market conditions.
And you talked a little bit about before, but actually, as I understood, the main reason if you lose client is is delisting, some companies being picked up
Yeah.
from the market. Has that slowed a little bit down, or how is your feel? Any sense of that moving forward? The share prices are still a little bit under pressure, so I guess there's a risk that someone sees a potential to take something away from the stock market. So a little bit about the feel on how that is going.
Yeah, with delistings, that's the main reason why we lose clients, of course. If I recall correctly, during last quarter we didn't have any acquisition announcements in Finland, at least. So there were quite a few last year and in the first half of this year, but that activity has a bit slowed down, at least for now. Then, of course, the other side of the coin is the IPO activity that we've discussed many times. Currently, it's completely frozen, the market. But talking with other advisors in the market, now I'm speaking about Finland, there's a lot of companies piled up in the line waiting for the market to be enough safe to go public. So at some point the market will pick up, but when that will happen, I'm not sure. But kind of like the appetite from the company and entrepreneur side is still there.
It's still there. Perfect.
In Sweden, we're making a lot of progress in content production and starting to build awareness and the community side in Sweden. So great job from our community and content team in that market. Probably some of you noticed that we launched the coverage of H&M and NIBE during the quarter. So and those are non-commissioned equity researches. So we do take some interesting companies to our coverage to build our awareness and visibility, and to show for the market, both the investor relations people and the investors, that there's a strong, high quality alternative in the equity research market right now, coming to Sweden as well. Yes, by the way, I think it was this morning that we're covering 85%, over 85% of the Finnish stock market already, our research team. So we have quite a good penetration in Finland, I'd claim. Then going to the events business. So I would say it's a bit mixed, the development. So in investor relations space, we and this covers quarterly event productions, capital markets days productions, and AGM productions. We have so strong product in those areas that we keep growing, and despite the market, I'd say we have good momentum in that business area because we have a really strong product. Then when it comes to other events, which are also important for our business to complement the IR focused business, in other events we're seeing a clear decrease in sales. And our analysis is that it's mainly because of the weak economic situation affecting especially the larger event productions. Budgets are right now quite tight. And like we discussed, or like you asked, like during COVID, when COVID hit, some events went from physical only to online only, and that brought us some COVID business. And now post COVID, we're seeing some of that business going back to physical events only. And our strategy has been to go into online and hybrid events. So our and especially I would say in investor relations segment, it's obvious that this industry needs to go to online or hybrid mode, because you need to serve the investors in a democratic and open and transparent way, and you can't do that with physical only events. So in this segment, it's obvious that hybrid and online events is the winning strategy, I'd claim. And then with other events, of course, we have so strong capabilities in doing very big and complex hybrid event productions. So we kind of like prefer to encourage our customers to see the benefits of doing hybrid events instead of going ourselves into the physical events business. That's a product area where we are not present, though we would have the capabilities to do that as well.
Yeah, and you mentioned it. You mentioned the AGMs, which you are positive on the pipeline, and I guess is that the proof in the pudding that they have accepted hybrids, but the budgets are down. So nice to have and need to have is this, and need to have is probably on the AGM side more than other sides. So is that why you are also have that feeling that it's a temporary budget restraints by the company, keeping the growth a little bit depressed here?
Yeah, but actually in AGMs, despite that they are for us quite attractive and big deals, we can still with the end-to-end offering we have for our clients, we can still give them cost savings if they buy the full package from us. Because normally in AGMs, the company, they might have to buy the event production from one vendor, they might buy the streaming from another vendor, and then the AGM software and processes from a third vendor. So it's a quite complicated package that usually has quite high price tag. While we can bring everything with a one-stop shop solution, which is way more easier, and many times it's also very cost efficient compared with the alternatives that our clients have, even though they are very attractive productions for us. So in AGMs, I'm quite positive about our competitive advantages. In Sweden, the events business, so financial hearings and stream publication that we acquired quite exactly 1 year ago, that's been actually performing well. So as expected, I would say that's well done in these market conditions. So we're still happy with that one. Going to investor relations software and our AGM solution. So here we've been for many years on a R&D phase. Now we're shifting to commercialize the products that we've been building. Of course, we continue to develop them every day. In the AGM solution, I think we have proved our case in Finland. That's been very, very strong, and now we are gearing up not only to continue to grow and take more share in Finland, but also to start an expansion outside Finland. So we had the first pilot case in Sweden with Embracer, quite a big company, good reference, and we are having our first pilot case in Denmark as well. So these are important milestone deals to take this product area outside Finland, and the events business that we had acquired a year ago, it has a very strong and important support for this product area, because the event production is such a big part of the AGM product. With investor relations software, good news. We're winning new clients in a faster pace than we actually expected. I'd say we have some momentum actually because of the market situation, because many times we can bring cost efficiencies or cost savings for the clients. And obviously, in this market situation, many clients are interested to hear that pitch, taking more of their investor relations stuff to be handled by Inderes. They can usually get more efficiency and cost savings. So we're making good progress there. But I have to remind that this is a fairly new product area, and these are annual deals. So the revenue starts accumulating gradually as we win more clients, and we need next we need to start scaling this to make it a scalable, profitable business.
Yeah, we have a life cycle question. Can you recap a little bit on which specific areas of the IR software business that it is? I thought you went from 403 to 426 clients, and I know it takes time before you can see that on the revenue side. But can you recap a little bit on exactly what IR products it is, and maybe a small explanation on what this does?
Yeah, so the investor relations software, what goes under that umbrella is the you can buy the full package of your investor relations website handled by us, and we can do the updates and maintain that website. So that's a full package product. Then you can also take the IR website widgets only from us. So share price monitor and owner monitor widgets. That's one part, and then the press release system that is mandatory for all listed companies. So those are the product areas, and we can sell them. We can sell the full package supported by some consulting services, or you can just buy the widgets. Yeah, they're actually in the Capital Markets Day, we stated that we have around 40 clients in this product area. So it's fairly new in the Inderes portfolio.
So is it land and then want to expand, or is it that you have landed a customer and now you're expanding this out to your current customer base, which already has some of the other products? So what is it mainly you sell this new sell it to?
Right now, we're mainly selling it to our existing customer base. Going forward, of course, this is one interesting product area to get into the client from here. Then, because there are a lot of synergies if we build integrations between our products. For example, if you have the IR website from us and you do your quarterly events, we can automate the whole. You do your quarterly events and press release system with us. We can automate a lot of the process on how the content is updated in the website and how the notifications go and so on. So there's a lot of synergies between different Inderes products, and that is why we are building this end-to-end product offering, because it brings out so much synergies for the investor relations operations of the listed company.
Perfect.
A bit more detailed into the number side. So January, September revenue growth 35%. There's a bit of impact from the currencies there. So it would have been a few percentage points higher, excluding the impact of Swedish krona. So that's having a small negative impact. Excluding acquisitions, around 10%, and share of recurring revenue 60%. Profitability-wise, EBITDA 12.2%, slightly up from last year. So improvement in that area as well. Then if we look at the third quarter in more detail, 23% growth organically at the previous year level, and that's mainly hit by the organic decline in the project revenue. Sweden performing as we had expected, 21% of revenue, and EBITDA slightly up from last year, 18.4% compared with 20.6% a year ago. When it comes to Q3 cost structure, we usually have seasonally high profitability during Q3, which is because of the accounting of holiday salaries. So those accruals are being taken from the profit and loss statement in June or July when people are on holidays. So that's why we don't have that much personal expenses on the P&L during July, while our recurring revenue continues to have the baseline for the revenue. So that's a purely accounting item that impacts 1 month profitability, which is reflected in Q3. But overall, the profitability is on a good level. We are keeping very close eye on our costs and overall kind of like being quite cautious in our own spending as well, but still balancing with the long-term growth investments. Our outlook for this year is unchanged, so revenue exceeding 70 million euros and EBITDA percentage improving from last year level. And the background for the outlook, that's also unchanged. Going into this year, we of course had scenarios, and we were also prepared for a kind of like negative scenario, a downturn scenario, which is kind of like what has happened in the second half. So we were prepared for it. So that's why it's kind of like not didn't come as a surprise, and that's why we can continue to develop this company with a really long-term perspective. We don't need to change our plans in any dramatic way. We don't need to pull the handbrake or anything else. We'll continue our march in a disciplined way. So there's the brief update and summary of how we're performing, how we were performing on Q3. Next, I'd like to walk you through where we stand on the big picture in our long-term strategy. And as we updated our strategy in May, also touch a bit upon how that work has been continuing after summer. So looking at where Inderes is today, where we come from and where we are going, we started off with the commissioned equity research business. We built that business successfully in Finland. We built our own platform to support that business, and we built a community around that platform. In 2019, we started to diversify our business to investor relations events, AGMs, and investor relations software. It was natural evolution for this company because the buyer is the same. It's the investor relations. We kept our focus in the investor relations domain and expanded within that segment quite successfully, I would claim. And that's how we continued our growth and started to build this end-to-end product offering for the investor relations segment. Going to 2021, when we IPO'd, we felt that we have nailed something that is worth taking outside Finland, something that is enough unique and differentiating and creates such value for the whole stock market ecosystem that is worth taking outside Finland. And we also had internally the ambition, hey, we're ready for this, let's do this. And that's why we went public ourselves, raised a bit of capital, and last year started our expansion in Nordics. And that's a long-term journey where we are at the very, very, very early stages as we speak. But we have started that journey. It's exciting and it's going forward. Where we stand from Finland perspective is that we're estimating that with the current amount of listed companies, we're talking about roughly 20 million euro addressable market, and it's completely dependent on the number of listed companies, how that market grows, and we've been quite successful in many of our product areas in Finland. And show that this concept works in Finnish market. Each of our product area is very competitive as a standalone product. But when we package these into one offering and we make integrations between those products, and we combine these products with the Inderes platform through which the investor relations can reach the relevant target groups, their audience, it just makes the offering so unique and differentiating in the market, and that's why we are doing this, and that's why we see a lot of potential here. During Q3, we actually announced one I would say milestone deal. It was a 3-year deal with Efecte, a Finnish software company on our First North list, where we made a 3-year deal with Efecte that combines all our products sold in one package with a 3-year deal. So this is just an example where we are going from selling point solutions into selling these end-to-end package with also quite long contract periods, which gives us quite a nice stability and predictability and growth in recurring business as well. But we're really early stages in that perspective. But that was one of the milestone deals there, proving the case that packaging this offering is making a lot of sense from our perspective, from the company perspective, and also from the investor perspective. Then going to our new strategy, addressable markets. So in our strategy, we have these 4 products that are our strategic product areas and 3 key strategic markets. So Finland, Sweden, Denmark. In Denmark, we operate with our strategic partner, you guys, so HC Andersen Capital. And from that perspective, obviously, Sweden is by far the biggest market. We're speaking about, in our estimate, over 120 million addressable market, and tackling that market opportunity, we are at the very early stages.
And you have shown in Denmark by our partnership, and in Sweden also by on the event side, financial hearing, but on the equity. So you have shown that you are willing to invest and also purchase something. But what on the research side, to really get this flywheel started, you need companies and you need content, and what needs to come first. So are you also looking at maybe some consolidation or maybe purchases on the way into the other areas, maybe the equity research side in Sweden, to kind of get a little bit, starting the flywheel a little bit faster than maybe it would be possible organically?
Yeah, of course, you could speed up stuff with acquisitions, but our strategy does not rely on acquisitions. Our strategy is built in a way that we can get the flywheel spinning also without acquisitions. So we don't rely on acquisitions. And how to get it spinning? I mean, you need to start pushing the flywheel from each angle. There's no one single point to start pushing it. You need high quality content. You need customers that give you cash flow, that gives you the capital to invest in better content. You need, of course, the equity research is quite strategic part, because that's so important from content perspective as well. So all of these parts are important. But if I would have to name one, it's obviously equity research. That's where we started in Finland, and that was the biggest fuel just to start the community building and build a digital service in Finland.
So, and that was why I asked, because there is a lot of players on this market, and we are seeing a consolidation in the Swedish market here. So on this side, so it was. I know you can't answer that question, but whether it was in considerations that to get it a little bit moving, with the content side, at least you could give it that maybe a little bit push. I know the community side is hard also to to purchase, but I know, of course, you can't give me an answer if you are looking at anything. But you straight enough, you answer me that organically it can also be done. So I will take that answer.
Yeah. But yeah, we're also quite honest to ourselves that it's not going to be easy. In our strategic strategy work, we spend quite a lot of time in identifying the obstacles we have on our way to make that the strategy into reality. Obviously, the topic that we just discussed is one of the biggest obstacles. In these four bullets are the high level obstacles that we could break down into tens of different small obstacles. And I would say that like this international strategy that we have, there's no there's a lot of obstacles, a lot of small obstacles, but nothing is like impossible to overcome. There are no fundamental obstacles. There's just a ton of work to be done. I mean, very kind of like basic stuff at the end of the day. And we're quite honest with what challenges we have and how to start tackling them. We have these three key themes around our strategy in the strategy work that we had in the spring. So productization and sales, Sweden, and international Inderes, and after the summer holidays, we've done quite a lot of work to convert those themes into set of coherent actions that make our strategy reality, that move us forward. So we have 10 different strategic projects that we are now working on. They go into quite detail with 12 months goals around each of the strategic themes. So the thing is that of course we have over 400 clients that we need to serve. We have over 70,000 community members that we need to serve. We have a lot of work in serving our existing stakeholders, and in addition to that, we have a lot of work with the execution of the strategy. But this really is a process that is bringing this company closer together and taking us to the same direction and making the strategy reality. It's called Project Diavola because we have a lot of pizza enthusiasts in the company. In addition to myself. And we had a pizza baking competition in our summer strategy day with the staff. I think we had like 16 contestants, and the winning pizza. I didn't win that competition. I landed second. The winning pizza was from Paavo Tiittanen. And his pizza was Diavola, so that gave the name for our strategy project. I like the name. I mean, this could have been like something fancy, like shareholder value execution strategy action plan or something like that. But I mean, we feel it's good this way.
Yeah, it's cooked down to a lot of small steps that need to be taken, right? That's
yeah. A few things. One thing I'd like to point out here is that we're working a lot with sales models and revenue operations that we have. Like I said, we've been a point solution sales company in history, and we need to change quite a lot of the ways we work with our sales to start working with the unified offering for the investor relations. Yeah, and all this work is done so that we can also stick to our long-term targets and also our infinite targets. So to keep up with the growth rate and profitability combination of 30 to 50 and annually growing payout. So that's all from my side.
Perfect. I have a couple of questions. One, and I know you are not going to guide us on 24 yet, but looking into next year still, and we don't know how the market would develop. Do you still think it's potentially to that you can deliver on your long-term model between this? I know you can always balance it out by investing less and getting more profitability growth, but looking into next year, I guess you still have some investments you need to roll out, and market we still don't know. So I know you're not going to guide, but do you still think to see it as a possibility to deliver on the 30 to 50% growth in these two combined?
That's a tough one to answer without guiding.
Without you are allowed not to do it. It's your feel of the momentum.
What I can say is that we are aiming to grow in each of the 4 product areas. So that of course I can say, and what you can also sense from what we are saying in our strategy and our communications, we will take good care about our profitability as well.
I will leave you.
I'll leave it there.
I know you can't say anything because then you start guiding. I just needed to get your feel of it. Then let's have an easier question. How much of your business is from non-listed companies? Probably most relevant on the event side.
actually not that easy because we haven't stated out that figure at least yet. Let's see. We are considering in our comms if we should publish that in our financial statements, for example, to improve the transparency. But unlisted, I would say it's a small part, and the share of that is decreasing because the listed company customer segment has been growing so much faster.
Perfect. I will let you off the hook now, Michael. I don't want you to overstep anything. I just needed to ask. But thank you for the audience for listening in. Thank you for the questions. And thank you for you, Michael, to taking us through your results and answering some questions. May everybody have a nice day.
Thank you, Michael. Thank you, audience.